Strange are the ways of the market. 2 days on a trot when we spoke about how a very high likelihood quant indicators indicating there should be a corrective move. Markets didn't move. Just when we say that it's becoming difficult to call out tops, the market doesn't give way really, but about 0.6, 0.7% lower in trade. Mid caps and small caps also correcting in trade today, by the way. So the breadth overall is looking wobbly. The bank Nifty is down about 400 odd points as well in the session today. So large, mid, small across the board. We've seen a bit of a corrective move in the session today. The market breadth should be adverse, about 1:3 in favor of the declines. Not at the lowest point of the day, but yeah, circa there. Let's get the heat map up on the screen. A lot of red, very little green, but it's not as terrible. Like I said, it's not that everything is fallen apart. So there is strength in life insurance firms yet again. HDFC Life, SBI Life doing well for themselves. Pharma, as we've been saying, continues to see select buying, because today too, by the way, we have Divi's, we have Sun Pharma in the green. Asian Paints has notched up some serious gains today, 3.5% higher. Some strength for Adani Ports on the positive news flow around land resumption. But the losers take the cake today. Metals, to an extent, select IT names, and the big one, Mahindra and Mahindra. Conspicuous by its absence in the top 15 names is Maruti, because it's flattened out completely after being high in trade, just about 0.2%. So that stock has cooled off, Tamanna. But the pressure on Mahindra and Mahindra stays. The question only is this also a sign of consumption, even the high-end consumption, coming into some kind of a pressure? Or is it a very, very M&M specific issue? I think time will tell.
I think if I were to guess, between the two, it's an M&M issue as of now.
For household consumption too, down about 7%. Household consumption down about 7% as well. There is at the margin, Tamanna, maybe some pressures.
Perhaps. But then I would say your FMCG pack not doing too badly today. Your Britannia, etc., still okay on a day like that.
That's
but
true.
Nevertheless, we're going to get deeper into the whole Maruti and M&M story on the show. Just for now, yeah, there you have the Nifty FMCG still 0.5% up in the green on a day which was otherwise painful. But that pain point, or that profit booking, if you may call it, 0.75% down on the Nifty mid cap 150, small cap 250, also nearly a percentage down. So it's an across the board pain point, and that's very relevant and obvious in the advanced decline ratios as well. Let's take a look at what's moving specifically. Blue Star, just specific stocks hit with profit booking today, and the consumer durable space was buzzing. Blue Star was buzzing on the back of a PLI scheme window which was extended. That announcement came yesterday. The stock was up 7%, down 7%, or up nearly 12% actually yesterday, down 7% today. So Blue Star facing profit booking today. Fertilizer stocks have also seen quite a hit. So yeah, if I were to take that point, are we seeing a larger rural issue kind of a story than 5.5% down on fact, RCF? It could also just be profit booking. One stock which seems immune to profit booking is RVNL. And after 4.5% cut yesterday, once again in focus, 9% up. A lot of news flow as well. There are order wins, there are agreements. Very little things, not really anything to move the needle in terms of profitability of the company. But nevertheless, if railways is in flavor, then RVNL is top of that chart. So again, once again buzzing. So is Rajesh Exports actually. No apparent reason visible, but buzzing in trade, 13.5% up. Delta Corp, on the other hand, down. Should be no surprises over here. Profitability has fallen by 68%. Actually, this is a recovery. We're seeing Delta Corp down just a little over a percentage point. This is a recovery for the company, for the stock, which had seen a bigger hammering earlier. Niraj spoke about insurance companies. We'll just talk about all the ones which are working today. Insurance is in focus. Are premiums going to increase? There's some buzz there. So LIC, SBI Life, ICICI Pro, HDFC Life, everything in the green. On a otherwise slightly painful afternoon, I would say, Niraj. And painful it is because you haven't been seeing any big runaway moves upwards, but not this kind of and it was a correction was overdue. I wouldn't even call it a correction, maybe a bit of a breather.
Bit of a breather, 0.5% odd. In fact, that's a good segue into Jay Bala conversation. He's founder and chief market technician, Cash the Chaos. Jay, thanks for joining in. Is it chaos already or is it still some time away?
Hi, Niraj. Good to be here. I think there's still time to be. I think 24,000, that's the important support for the Nifty for now. But, the markets are still bullish, but it's an unstable bullishness. As long as the markets stay above 24,000, they can skirt the unstableness and stay bullish. But below 24,000 on the Nifty, that's when it starts getting unstable. The Nifty has gone up as of today without clocking a low, closing below the previous day's low for 24 sessions. When it comes to the S&P 500, it's gone up 70 calendar days without clocking a 1% drop. So the markets are quite stretched in the short term, but and it's gone up quite in a regular fashion and without seeking a sizable corrective move. So watch out for it. Until that point, we can stay bullish. The markets tend to surprise a lot of people on the upside. So I'm waiting for the chaos to set in until 24,000 is not broken.
Saying this is not the chaos which has come in yet. It's just a bit of a murmur. You're waiting for the chaos to set in. In this time, what would you do in this market, Jay? What would be your topics?
Yeah, I am bullish on two sectors, even if the chaos were to set in. First is the FMCG space. I mentioned this in April and May. I've been anticipating 60,000 for the Nifty FMCG index, and it's proceeding in that direction. The other sector I like is the Nifty Pharma index. A pullback in the Nifty Pharma index, even if it were to come through, that will stay above 19,900. So further record highs to come through for these two sectors. And the FMCG sector in particular, if you recall, I mentioned that to be active a couple of weeks ago, but it's come in a bit behind schedule. So it's welcome and untaken. And if you recall from a May conversation, I had said Imami, Dabur will be the ones that will be contributing, but HLL will be giving weight to the FMCG index, and that's what is happening. Dabur and Imami are doing pretty well, and HUL is doing reasonably okay, giving weight to the FMCG index. Okay. So HUL, Imami, Dabur in focus, and this is, Jay, it's interesting that those are your picks because this is exactly the conversation we were having, that what's happening with M&M? Is it a bigger story? Is it a consumption story? Or is it an M&M story? Now, while we'll get into all of that fundamentally, I just want to understand that at this point, at 27.29, has M&M been punished enough and time really to pick up over here? Or you'd stay off? Yeah, it's pretty close to an important support. I was bullish on this last time, and I was anticipating fresh record highs to come through. So it's a little bit negating what I had anticipated. If the stock were to close below 27.20, I'll be a little bit cautious on it. Maybe it's done its clocking fresh all-time highs, but I won't yet turn bearish on it. I will wait for a lower top to register for the stock. But if it were to close below 27.20, it's negating my bullishness. So I'll be a bit careful here. Not yet bearish.
Not yet bearish, but 7% correction, and let me get my colleague Puneet, who tracks this very closely, to try and give us the nitty-gritties of what is M&M had to say as well in response to the reaction on the price cuts that the stock is seeing. Puneet, good afternoon.
Hi Niraj, good afternoon. Just before we slightly get into what the management has guided and said actually in its press release, we just look at the potential 3 reasons why the stock is falling today. One of the key reasons is, of course, the longer waiting time of some of its products like the XUV 700. The top variant has seen a lot of waiting periods of about 8 months, and this is not just in this particular year. The problem has persisted ever since the launch at the end of 2022, and over the last 12 to 18 months this has persisted. We've also seen that the entry level 3X, so has a 32-week waiting period, which was launched in May this year itself. So that has been one of the key persistent issues. The second is, of course, its absence from the hybrid space now. We saw the UP government notification that came in this week where they will be waiving off registration fees for hybrid cars, which it comes down to a tune of roughly 1.8 to 2 lakhs per vehicle for the consumers, which will now be waived off. Key beneficiaries, of course, Maruti, but M&M has, speaking to you only and at NDTV Profit post Q4 result, they had mentioned that they won't be entering this space and is focused on the EV space going forward. They see that the production line, which is the third reason, that production has increased per month compared to the same time last year, but that has not been in line with the demand that its products has been generating. And finally, on price cuts by competition, we have mentioned that Tata Motors cut its price yesterday across variants of Nexon, the Punch, the Harrier as well. And in response, Mahindra has just cut the prices of the top variant of the XUV 700. Now, what did the management have to say is that they have said that there is no linkage between this price cut of XUV 700 as well as the UP hybrid as well as the EV policy. They say that this is a continuation of the business strategy, and to quote them, they have said that they wanted to bring in average price points down to drive growth further. They did launch one of the variants, the AX5, which they call it, which is now the most popular variant of XUV 700 selling out. And finally, on growth, they did mention that XUV 700 bookings in June have gone up by 23% compared to May, which is the previous month. Now, that's a very important statement because we saw that they mentioned after the Q4 results, a lot of cancellations happened in May when they went back to the consumers after the 6 to 8 month time frame to check if they still wanted the product, and they saw some cancellations. And in the presentation, they mentioned as well that 10% cancellation is the run rate that they're going with. So a key clarification coming in on the particular stock price fall which we've seen today, but that's what we have on M&M. Back to you.
Okay, so that's the view from the company that Puneet has given us. I've got Tushar joining in as well for a view on what the dealers are saying. Now, Tushar, the company is clearly saying that this is one or two models on which we have cut prices, but our inventory, we have long waiting period for our other models, which is a fact. Some of the very popular ones are doing well. What is the feedback from dealers? Because I know you've spoken to a host of them, including FADA today.
Yeah, so essentially some dealers that we spoke with, especially in the Delhi NCR region, they said that they are at times worried about the kind of variants that come in through from Mahindra and Mahindra. Essentially, it's actually not the demand-supply mismatch. What they were pointing out is actually because of the variants that come to them. So the AX7 variant has seen a price cut this time because there were no takers, so to speak, because there were inventory build-up this time. But the same was not the case last year because AX7 was in demand and AX5 was not in demand. So once they launched this new version of the AX5 in May, the price gap between the AX5 Select variant, which gives most of the features that is on the AX7 variant, the price gap was about 4 lakh rupees, which saw increased demand for the AX5 variant. Essentially, that turned into non-pickups, so to speak, of the AX7 variant. Hence, the price cut is that's what they're saying at this point of time. So this trouble has been there with Mahindra and Mahindra for some time. Their production is not aligned, so to speak, with the demand. They're still exploring how to get that thing together. The same problem is with the newly launched 3XO model that was launched. The base model and the top-end model has still not arrived at dealerships yet. Only the mid-tier variants are available with dealers right at this point of time. So this demand-supply mismatch, the production fungibility, so to speak, of Mahindra & Mahindra is still in question, despite the clarification the company has issued.
Okay, so that's the story as far as M&M is concerned. But interesting conversations through the day today, and I think Niraj, you spoke with Mihir as well, of Mihir Bora, on how the street is looking at the auto space. In both cases, Maruti yesterday and M&M today, it's perhaps a bit of a knee-jerk reaction because the UP relief is not going to be a game changer for Maruti and not maybe the death knell for M&M. So yeah. it's a bit of an overreaction.
But what if so on Maruti at least, I somehow think that if indeed other states follow suit,
yeah,
then and logical that if Uttar Pradesh has done it, then somebody in NCR or Delhi or Haryana, which is such proximity, will probably also, the states will follow suit. Otherwise, I can go to UP, take the car and come in.
Yeah.
So
They'll lose revenue otherwise.
Yeah. So maybe the other states might have to follow suit.
The question is, does this become a hybrid versus EV kind of a situation? Where does the policy incentive shift? Because at the core of it all, the issue is that if you want to move people from traditional petrol and diesel fueled vehicles to a cleaner option, you're going to have to incentivize, and it's the government that has to do it.
Yeah, it's very interesting. M&M, for its part, saying that they believe hybrid is more an interim option. But, that doesn't matter because the stock is down today. As we hit that break, here out Mihir Vora, CIO of Trust, a mutual fund, who spoke to us earlier today on Talking Point, and we asked him about the outlook on the auto sector and the reason it might be in a downturn. Listen in.
Given the fact that auto had done so well as a sector in the last few months, maybe, it's taking a breather. We also must understand that this year is a little bit skewed in terms of the wedding season. So, for example, there were hardly any weddings in the last few months, and even in July there are only a few days of weddings, and then again after August there are very few dates. So it's I think one of the years with the lowest number of days which are auspicious for weddings. So we might be seeing a little bit of seasonality impact because of that too.
Back with India Market Close right here on NDTV Profit. What we are trying to do over the next 10 to 15 minutes is try and understand from a dealer's perspective, what could the moves of yesterday and today mean for those respective car sales. So we've got Rishabh Sanghi, who's partner at JS 4-Wheel. They are large on the M&M side as dealers. Sandeep Bafna, CMD of 4 Point Automotive, we are large on the Maruti side as dealers. And then in a bit, we'll get in Mahantesh Sabharat to talk about the analyst perspective as well. Gentlemen, both of you though, thank you so much for joining in. I'll start off with the M&M perspective since that news is today. And Rishabh, what does this price cut, if at all, indicate? And what have been the recent sales like? Because we know that when the SUVs were launched, the waiting periods were 7-8 months. What we are now learning is that clients are saying, we don't want to wait for 7-8 months. So let's go for other options unless the waiting time is lower. So have you heard from the company about this price cut starting today? Are you enacting them? Will they increase sales? Tell us a bit about it.
Thanks for having me. So yes, the price cuts have kicked in and they kick in from today. And it is only on a couple of variants of XUV 700. And that is primarily to commemorate the 3-year anniversary on XUV 700. We've just sold about 2 lakh vehicles in less than 3 years' time. So I think it is only a very short intervention that has been taken in the market to celebrate the success of the 700.
Okay. So what about the sales for some of the others? Because the conversation that is floating around is, and we'll get in Sandeep Bafna's view on that one as well, is this the start of a larger price cut trend? Because there was a newspaper article 2 weeks or 2 days ago which spoke about how the 4-wheeler inventory is to the tune of 60,000 crores, and you don't see 2 months of inventory in a non-festive season month. Rishabh, the same question to you.
So at M&M, the retails have been robust. In fact, at M&M, we've gone through a dream run and the sales do not seem to be slowing down. Yes, definitely the 7-8 months waiting period that you talked about, it was a scenario some 1.5 2 years back when there was an issue with the overall supply chain in the auto industry because of the semiconductor chip. So it doesn't remain 7-8 months, but for a few of the variants, it still remains a few months. So variant-wise, there are a few variants that are available in a couple of months' time, while there might be other variants which might take a little more than a couple of months. But the SUV and the passenger vehicle story still remains robust as far as M&M is concerned.
Okay, so M&M is robust. That's what the press release says as well. I think, we're trying to speak today with both an M&M dealer and a Maruti dealer to also understand what's happening with the stock, what the street is looking at. So let me bring in Sandeep Bafna, because this entire situation has started yesterday with a regulation from the UP government that is giving incentives, exemptions from road tax, as well as registration fees for hybrid vehicles. Now, this is something that EVs were enjoying earlier. Now, hybrids are as well. Sandeep, I want to get a sense of the kind of demand for the hybrid category in Maruti. And is that growing? Is that conversation now very alive and kicking within customers about whether I should go for a hybrid or for an EV? And what is the outcome at the end of that conversation?
So what happens is, number one is, hi everybody. Just wanted to inform that what UP has done is a big step towards making India more green and favorable for the hybrid products. To be very honest, what happens is when a customer comes in, he's lured with the hybrid product, and he says that, okay, I want a hybrid. I'll get just hypothetically speaking, a 25 average on a product like a Grand Vitara. And then what happens is when he sees the price difference between both hybrid and non-hybrid, because we have both the products available with us in that range, he prefers to go for the non-hybrid, because then he lands up calculating that his monthly run is just going to be around 1,400 to 1,500 kilometers. And for which if he has to pay about 2.5 to 3 lakh rupees more, then he gets dissuaded from buying a hybrid. But what UP has done is it is at least maybe at par with the non-hybrid vehicle by offering this incentive. And I hope all India follows it, because if a vehicle gives an average of about 12 to 13 and suddenly offers around 25 average, I mean, you see that would really change the market scenario.
Okay, so you're saying that hybrid changes the market scenario, and it is now preferable to EV for a variety of reasons. Now, the reason that I'm segueing into this sort of a debate is because if you think of it, that's what is at the root of the conversation right now. I mean, M&M, of course, the stock getting pushed a little bit because of inventory level concerns, but at the end of it, it's about this UP thing, and is there going to be a policy push towards incentivizing hybrid vehicles? Rishabh, your take on that?
So I think hybrid today account for a very minuscule percentage of total four-wheeler sales. And if I speak specifically about M&M and the market that I represent, I don't see a lot of customers opting for a hybrid. And so yes, it is a big statement that has come from the UP government, but we are yet to get details of what exactly it means and how would it push sales forward. But I think for M&M, I don't see much of an issue, because the kind of vehicles that M&M comes out with and the kind of customers that come for M&M vehicles, I don't think they are looking at a hybrid option right now. They come to M&M for the power that they get. They come to M&M for the...
1 second, Rishabh, there is no hybrid option right now. That seems to be what the market is discounting, right? They can't come to you for a hybrid option because there isn't one available. But when they come to you for anything apart from a traditional engine, a petrol or diesel version, then is there that conversation? Are you seeing that lacuna? And if all things remain the same and hybrid is incentivized, then how do you see it panning out?
So I'm saying that even today, when we don't have a strong hybrid option, I don't see my customers moving to a brand which offers a hybrid option for better fuel economy. So I don't see that happening today. So how is it going to pan out once there is a policy like that, or once Mahindra also comes out with hybrid option, is only time will tell. But we don't see customers going that way.
Okay, so Sandeep, lest this sound like we are making this an M&M versus Maruti option, we are not. But the point that I think Tamanna was trying to make is that does hybrid become a lot more popular because of this? Now, we've kind of spoken about that both have their merits. The larger question around the inventory levels, I asked this question to Rishabh, I'm asking this to you, Sandeep. Are inventory levels unusually high for this time of the season, part one? And therefore, would companies, maybe dealers, need to resort to some bit of pricing action in order to clear up the inventory before the earnings season inventory starts kicking in?
So this is actually since the last 4 years after COVID, we've not seen inventory pileups at all. So the issue is this, that before COVID, a 2-month inventory was a normal thing. Now suddenly, post-COVID, we've been having 15 days, 1 month, max 1.5 months, and now it's 2 months, so everybody is getting very frantic. But it isn't very unusual actually, because the company doesn't stop production during these slack months, and a little bit of inventory built up always happens during this time. I don't see this as too much of a cause to worry. Moreover, to do with the fact that in our whole, if you want to see, there are a lot of models which are on waiting, and there are models which are available off the shelf which we've got inventory for. You must have heard about the Dream series. A lot of concentration happening there from Maruti, and suddenly, because of this kind of concentrated effort by the management of Maruti, there's a sudden demand of those vehicles also which has been created in the market. So we are offering better solutions for anybody who wants a transportation solution vehicle. And if you see that this will continue for for the next 1 month.
Okay.
And after which, once the season comes in, things will change.
It should be fine. Specifically on small cars, Sandeep, are you seeing inventory levels at par, like 2 months odd? What's the trend there?
Slightly higher than 2 months, I'd say 2.5 months. But that's where this Dream Series has come into the play. And if you go to see, we are offering better pricing, better solutions to the customer for enticing him to buy the product, including the fact that we are offering vehicles at 4.99 schemes from financiers. So, in fact, right now is the right time to buy. And I mean, I'm not trying to stand over your the news channel, but I'm trying to say that any salesperson should think about buying right now, because this kind of pricing will not be available once this kicks in. Post Raksha.
Okay, so this is a temporary thing, says Sandeep. All right, a lot of buzz in the auto segment. Thank you so much, Rishabh and Sandeep, for speaking with us. Interesting conversation there, where you have a perspective from an M&M and a Maruti dealer, since these are the two companies we're talking about today.
Yeah, most certainly. And well, putting up a brave face thus far, the question only is, I'm hoping that they are smiling at the end of the next 2-3 months as well. And hopefully the discounts don't have it so high from a dealer perspective. From a consumer perspective, not that I have to buy a car, but I'm hoping that there are more discounts.
You will see discounts for certain models, even over here. If you see, it's the ones that don't go. I don't know if you're going to see discounts on your top selling models anytime soon. All right, Sudeep Bandyopadhyay also with us. Sudeep, we've been getting the dealer perspective. Just one quick word from you on the stock perspective as far as M&M and Maruti are concerned. First of all, are you liking this space? And what about these two players?
Well, I think as far as M&M is concerned, the game changer will be tractor sales pickup. We've been waiting for that, and monsoon being what it is, and expectation of it being good, there are a lot of expectation built around tractor sales picking up. If that happens, I think things should start looking up for M&M. Of course, they have this production getting aligned with actual market demand issue. And that is getting played out, to my understanding. That is getting played out in the market, because they have models with the dealers which the demand is less, and they need to resort to some kind of discounting to get rid of those models. The models for which there is demand, I think production is still not aligned fully. So there is a bit of a challenge, but I think overall game changer will be tractor demand when it goes up. As far as Maruti is concerned, I think the UP policy is probably the start of a game-changing event. UP is only about 12%. It's a big market, but it's only 12%. But I think Haryana will have to follow, Delhi will have to follow, and maybe at some point of time Punjab. And this will, probably create a dynamo effect. And I think it will be good for Maruti, because they are the only listed player offering a meaningful hybrid at this stage.
Okay. Sudeep, I'm glad you were hearing on that conversation as well, because good to get that perspective. We've taken the auto view from Jay Bala, so therefore that is sorted. But as we speak, Maruti Suzuki has slipped into the red, call it market pressure or otherwise. Just pull up the Nifty once before we take that break. There's a lot of stocks, IT, banking, auto are under pressure, but the Nifty has recovered a little bit of its lost ground, just about less than 0.5% in fact for the Nifty 50. Stay on, gentlemen. We'll take a very quick break. Maybe come back and ask Jay Bala about the Nifty as well, and some more active names. Stay tuned.
quick look at where the markets are going. Still under pressure, but off the day's lows on the Nifty at least. And slight uptake, I would say. Still about 0.5% down. Bank Nifty under pressure as well. And let's just pull up the Bank Nifty and the intraday there. That's where you can see the pain point as well. Of course, auto, metals, PSU banks, IT before result season kicks off, one day before it is about 1% down. And you're seeing some pain there as well. Agam is joining us now to just help us understand what's happening on the derivative side of things. Agam, expiry taking its toll?
Perhaps, yes, that's a possibility. And, we did lose out on 53,000 on the Bank Nifty the other day. And today it does seem like we've seen a continuation of the trend, but that's had an impact on the Nifty, and that's not necessarily because of the banking counters. I'm going to start off with the Nifty, which is taking a cut around 0.5%, unwinding coming through. The Bank Nifty, again, we have seen a cut of around 0.7%. It's losing out on 52,200. Not losing out, I would say hanging around there, at least as far as the expiry is concerned, but a little bit more unwinding coming there. Now, as we move on to the options market, the Nifty at the moment, as we move into the weekly options for tomorrow, while we do have significant writing around the 24,000 mark, we're starting to see a little bit more activity return to 24,400 and 24,500 calls. It will show up as a little bit of resistance in tomorrow's day of trade, provided the Nifty does not open above these levels tomorrow. In the Bank Nifty, of course, at the moment we are at 52,200, and most likely that's where we're going to see the expiry. That's also indicated by the considerable amount of calls and puts being written around that strike. But when it comes to stocks, let's pull that list up. Let's see where there is traction. So we have longs in Pidilite Industries, but save for that, a lot of weakness in M&M, MCX, Hindustan Copper, all of them looking at shorts. Even among stocks which are seeing unwinding, we do have Chambal Fertilizers coming off by around 2.5%. Max Financial Services, Canfin Homes and Bata advancing to a certain extent. So there's about a short covering there. But the market breadth is not encouraging, and neither are the indices. And even though the broader market indices are off the day's lows, there still is some amount of weakness, and that perhaps could play on several of these investors and traders' minds that we move on to the next few trading sessions.
Absolutely. Thank you for that, Agam. Jay Bala and Sudeep Bandyopadhyay with us. Just want to quickly put focus on Asian Paints and Berger. Nuvama note right now talks about how their detailed channel checks confirm that Asian Paints and Berger Paints have taken price hikes of 0.7% to 1%, effective from 22nd July across most of their portfolio. Of the two stocks that are doing okay today, Berger Paints is one, and let's just take a look at Asian Paints as well.
Top gainer.
Top gainer. So that's really explaining what's happening there. This is a positive move, the note goes on to say, for incumbents to fight Birla Opus by slightly increasing A&P spends. Remember, Grasim was doing very well this morning as well. This also demonstrates that the pricing power of the paint industry remains intact after the entry of a major player, Birla Opus. So paints are buzzing this morning. Jay, any of these that you're tracking on the charts?
Yeah, from a medium-term perspective, I don't like Asian Paints. You need a bit of caution. I think it's put in a long-term to medium-term top. So I'm a bit cautious there. But there's another stock within the paint space, Indigo. It's a relatively new listing that's breaking out today. But stop loss is quite wide, but it looks like it can run up quite sharply. A stop loss of about 1340. It's come down from 3,000 odds from a listing high to about 900, and now it's breaking out of a trend line. So it's got potential to scale somewhere about 1,800 to 1,900. So that's a sizable up move, and it's a relatively untouched stock. So that's the reason why I like the stock.
9.5% higher. Sudeep, crude prices aren't quite buckling down as yet, but paint companies have taken price hikes. Is there a good enough reason? Is that a good enough reason to buy into the paint companies?
Well, I think directionally, Niraj, it is a good step because with Grasim Opus coming in, these guys, existing players, needs to strengthen their position so that they can get into that price war, which is expected on the front foot. So I would say it's the right step. But as far as acquiring these paint companies, I'm not too sure I would like to do that. If I have to really bet on a paint company, I'll probably go back to Grasim. I think, the more I look at it, the more I find rationale in the step taken by the group. And with the expansion of Ultratech, the way it's happening, both organic and inorganic, and the fact that paints go hand in hand with cement, the distribution network, the spread, I think it's a fantastic strategy to roll out the paint business. And the synergies are quite obvious and becoming more and more obvious. So if I have to take a long-term bet, probably I'll take it on Grasim, not one of these existing paint companies.
Okay, so Grasim is Sudeep's pick. Jay Bala is talking about Indigo, which is very interesting. It actually is completely firing today in trade. And just take a look at what that Indigo stock is doing. Just astonishing, about 10% up. And yeah, we're getting those details as well. Well, there you are. Sources on paint companies to NDTV Profit. Asian and Berger have hiked prices. This is like how we mentioned in the Nuvama note. 0.7 to 1% across portfolios. All right, let's talk about one other stock that refuses to really show any signs of pressure. A little bit of profit booking yesterday, but then look at what's happened today. 12% up now on RVNL. It's the talk of the town for the past few sessions. And even as we're speaking about RVNL and what do you have to do in it, what next, etc., the question is this kind of run-up justified? So we have a bulls versus bears case that my colleagues Anushi and Mahima are putting together. Over to you guys.
Right, so Tamanna, RVNL is one stock which has continued to remain in focus, listing price of about 19 rupees, and from there on we are seeing it about 500%, and this is just in the course of 5 years if you are looking at. Even 1 year return remains strong, about 3% of gains here. But we'll come to the order book and see how it has performed over the period. So the first argument is the kind of order book it has built. So if you go to FY23, 56,000 crore of an order book, which from there on it's about 1 lakh crore that they're targeting in FY25. So strong pipeline going forward for the business, strong revenue visibility. The order book to bill ratio also, if you look at 2.76 it was 2 years back, and now this is over 4 times. So comparatively strong growth for the business going forward.
Right. Anushi, definitely the order book is, getting inflated every year since 2022. But if we see the kind of revenues that the growth in revenues that the company has shown, it does not justify the kind of way the order book has been inflated. In the past 5 years, the revenue CAGR has been 24%. But in the past 2 years, if you see, the revenue CAGR has only been 5%. And going forward, also the management has guided revenue growth of only 5% in FY25. Plus, their expenses are growing at a CAGR of 10% in the past 2 years. And the management has also guided that they are expecting a 10 to 15% growth in their PAT. But considering that the revenue growth will only be 5%, and if expenses keep growing at a CAGR of 10%, the kind of guidance of achieving 10 to 15% PAT growth seems a little far-fetched.
But Mahima, I'll come back to the argument that you've made. It's a very short time frame that you're looking at, 2 years compared to what it has done in 5 years. So if you look at 5 years, the revenue growth has been about 20% in their revenues. If you look at the PAT growth, 25% growth here, and from there on it's expecting about 10 to 15% of a boost in its EBITDA margins as well. It's a profitability which continues to remain in focus. So we can't negate it completely over what it is going to do in this due course of time again. So yeah, the question is we have to look it on a bigger horizon, even the 5% that you said about the revenue guidance that they've given. Now, this is for this year and the last year target. But going forward in FY25, with the kind of order book it has built, 1 lakh crore, they're expecting better pickup from FY25 onwards.
Right. Just on the consistency part, on a lighter note, the company has consistently maintained their margins at 6% only. So this is one of the reasons why, there's a bearish case for this particular company, because the company has not grown their EBITDA margin from 6% in the past 3 years. And, when it comes to investing in a company, valuations play a big role. The company is valued at 77 times right now. And going forward, if you see, as per Bloomberg estimates in FY25, it's around 74 times. And FY26 estimates show that it will be around 66 times. So, being a government company, we've never seen such high valuations. Plus, if you compare it to its closest peer, that's IRCON, the current valuation, trailing P is at 32 times. So at present, RVNL is double when it comes to valuations as compared to its peers.
Again, you talked about valuations. That's a fair justification. It's not just RVNL in general. All the PSU stocks, they've been on this stupendous run, the stock rally that we are seeing versus the kind of valuations they command. But coming back to RVNL, 10 to 15% of margins that they are looking going forward. And this is on the back of the higher bidding projects also they are taking. So with these higher bidding projects, they're expecting about 10% margins here. Let's just take the last three scenarios in example. And this they started 2-3 years back. So 40% mix coming in from this side. So again, this remains on a stronger trajectory. Along with this, we also have the budgetary allocation that remains on a forefront for Ministry of Railways from 1.56 lakh crore to about more than 2.5 lakh crore in this interim budget that we are looking at. There you go, 2.52 lakh crore. So a 50% jump in this 1 year and then about a 5% jump over here. So government has continued to remain steadfast on its focus to grow the Ministry of Railways, be it the bogies, the Vande Bharat trains and the port connectivities and more. So strong focus continues to remain on the railway side as well.
Right. Right. So just to conclude, it's been a pure retail play. Whenever an order win comes in, the stock literally runs up. But we saw a significant slump when the election results came in. So we look out for more order wins and see how the company performs in FY25.
All right. Thank you, both of you. Don't know who's won the argument, but Sudeep, are you a bull or are you a bear on RVNL or stocks like these, which have had a very heady run?
Well, Niraj, I'll tell you something. Some of these PSU companies, and I come from many, many years back, and the experience hasn't been good. The order wins doesn't mean, it gets translated. Execution remains the key. And, I will again mention BHEL. Look at the pace of order wins and fantastic, order wins, and look at the performance, even last quarter. I think it's disastrous. And to consider that they are at such high valuations now, the performance will at some point of time start becoming a major issue. So as far as RVNL is concerned, I think I will definitely not recommend a buy. And if somebody is invested, I'll keep advising them that enjoy, but be very, very careful and exit and book profit at some point in time, because the valuations definitely are not sustainable. Order wins doesn't mean bottom line. Order win doesn't mean performance.
Yeah, but you know what? The thing is, the problem with us fundamentalists, Sudeep, is that for the last few days, weeks, months, we've been crying hoarse about sanity in valuations and the stock keep on going up. That has been the issue, Jay. I mean, what's happening with these stocks like RVNL, for example? What do the charts suggest here, Jay?
Yeah, the long term is still bullish, but I know in the very short term, it's got probably one more high sequence to come through. So probably one pullback and one more record high. But post that, it's due for a sizable correction. I know it's gone up 10 folds from 57 in 2023 to 610 now. A little over 10 folds. So it's and the price action, the very short term momentum is still very strong, backing the price. But the price action is telling me that the next pullback and the high will probably be a completing sequence, and then the stock is due to pull back in a medium-term correction. So not to preempt the market, right now it's still strong, but once you see that sequence complete, then what Sudeep is pointing out in terms of valuation, that will play out in price action.
All right, another stock completely breaking out is Shopper stock. And on significant volumes, much more than their usual ones as well. I'm not sure what's happening there. Suddenly it spiked up about 15% odd. We'll wait and see what details come through. But Jay, is this something that you're tracking? Shopper stock, any views there?
Yeah, it is breaking out to a multi-week high, and it's got strong momentum with it. Probably this is sustainable for the stock, at least in the short term. As long as the stock can hold above 720, 765, even that's better. As long as it can hold above 765, I think it's heading for 1150 to 1200.
Okay, 765. Remember, it's hit a 920 level there on a day's high and has just spiked up today as well. Well, the other focus, of course, and that's going to be the big story after tomorrow, frankly, is the earnings season, and kicks off with IT major TCS that will be reporting numbers tomorrow after markets close. What's expected from the sector? Will discretionary spend, deal wins continue to be a trigger? Are you going to see a better than expected Q1? Rucha joins in with more on this.
Thanks, Tamanna. So as you rightly mentioned, TCS is kicking off the earnings season by reporting its numbers tomorrow after markets. But I'll broadly start with what are the things that we should watch out for during the earnings season. Now, trends in discretionary demands is the major thing that is to be looked up to in the earnings season. Clients' budget outlook, which has been under pressure, is also another thing to be watched out for. And the conversion of deal wins into revenue is the last thing. Now, moving on to what the Accenture results indicates. Now, stability in discretionary demand is likely because Accenture has maintained its guidance and also reported the highest managed services bookings. Now, this is what we look at for getting a traction on what will happen for the Indian IT companies. Moving on to expectations from the 1Q numbers, Infosys is expected to lead the growth with 2.4% of constant currency revenue growth, while HCLT is expected to be the laggard by reporting negative number of 1.9% degrowth in the revenue. Now, this is largely because of seasonal headwinds at HCL Tech and offshoring of a large deal. Talking about guidance, largely major houses expect Infosys, HCLT, and even Infosys and HCLT, to maintain their revenue and operating margin guidance, except JP Morgan, which expects HCLT to revise upwards its revenue guidance. Else, all in all, on the guidance, maintain is what brokerage houses expect. Moving on to earnings calendar, broadly briefing on TCS set to report tomorrow, day after HCLT set to report on Friday, 12th of July, and next week we have LTI Mindtree on 17th, followed by Infosys and Wipro on 18th and 19th respectively.
Wow. Yep. Well, we'll watch out for that. By 19th, we'll have 5 of the biggies out. So 9 days from now, the IT story will be known, whether there are generative AI deals or no.
You know, the thing of every quarter, Niraj, is that we start with all of this excitement about IT. At the end of it, after the first few days,
IT is forgotten.
It's just forgotten and done, because then it becomes all about the banks. And IT hasn't really done much for a while.
So can it?
Sentimentally up or down? I don't know. So, beyond that, are you going to see much or not? But yeah, it's first off the block. So definitely that's exciting.
And post Accenture, I think that the stocks have had a bit of a move. So just trying to... Sudeep, just thinking out loud, do you expect fireworks from the IT results or commentary?
I think as far as Wipro is concerned, I'm expecting some good announcements. Market is speculating about, buyback. The period is over, that wait period is over, and it may come, and that will be exciting. Some of the deal wins, of course, Wipro has already announced some, and I think that should kind of soothe the market. As far as Infosys is concerned, I'm expecting a much better quarter and, lots of positive commentary from the management, because the deal wins have been there. So these are the two companies where I'm positive. As far as guidance is concerned, there is an expectation that HCL probably will up their guidance, and that should be positive again. TCS, we are not expecting anything great. Let's wait and watch.
Up the guidance, that could be interesting from HCL Tech. And Wipro, maybe some buyback-led announcements. That's rumor on the street. Sudeep is right. Let's see if that happens. Jay Bala, a word on IT and maybe a BTST or an STBT as the case may be.
Yeah, I have, first let me take the position pick and then come to IT. I'm bullish on Pidilite on a BTST as well as a positional call. For the positional call, the stop loss at about 30.20, and I have a price objective of 3,500. And you can use the same stock for BTST. I also have a positional call on KRBL. It's breaking out of an inverse head and shoulders pattern, and the stop loss is 282 and price objective 380. Also, rough rise on the commodity exchange in the US looks like it's bottoming, so that could also provide a tailwind for KRBL if a rough rise starts to pick up in price action. When it comes to Nifty IT index, I think it has got two potential. It's equally balanced. I think it has potential to scale a fresh all-time high slightly above the 2022 high and then top out. Or it could pull back somewhere to about 35,000, sub 35,000, and then go back to fresh all-time highs. Both will be medium-term bearish, but I'm not, sticking to frontline names. As I pointed out last week, I like Black Box, which was earlier Avaya Global Communications. I also like Apple, which I pointed out a few weeks back. So Apple, if it were to trade above 1510 post this IT result season, will be a massive breakout. So watch out for 1510, very important level for Apple. If that gets taken out, it's going to be on a big upward trajectory.
Okay, so Apple is on Jay Bala's radar. Sudeep, before we conclude, I'm not expecting a BTST call from you, but for the next couple of sessions and as we get into results season, what's top of mind?
Well, I think, FMCG is one space where I've been positive for some time. And I think time is coming for them to deliver. One stock one should definitely look at is ITC. Assuming there is no change in excise for which the likelihood is less, I think this is one stock which is definitely attractive compared to peers on a valuation basis. And with rural consumption picking up, I think this should do well. Also, we should definitely look at Dabur. Again, the business update has been decent, and the numbers also should be better than probably what we have been seeing from Dabur in the recent past. So FMCG is one space where I'll be watching keenly for the results and the commentary.
Okay, wow, that's by the way, I must say, this is a very long list of very specific pockets that Sudeep Bandyopadhyay has given us to watch out for. Wipro, HCL Tech, FMCG names like Dabur and more. So watch out for those. And Jay Bala will keep an eye out for the 1510 level on Apple. Both of you, thank you so much for taking the time out and being with us today and giving us your thoughts. Let's start wrapping up the markets, viewers. And it's not been a great day, but it's a bit of an afternoon of recovery, if you will, because the Nifty, unlike 0.7, 0.8%, is just 0.5% down. Yes, the breadth is looking a lot more adverse, but be that as it may, the Nifty fall, not bad. In fact, the breadth has improved too. We're not at the lowest point of the day. It's improved quite a bit. So not bad. Bring up the heat map for the Nifty 50 before Tamanna talks about the mid caps and the small caps. M&M stays low, 7%. Or metals have fallen today, big time. And I wonder if got to do with a global factor. And then some IT names too have come off in the session today. So that's it. But the market breadth on the Nifty too has improved, even Stevens. And Asian Paints let's stick with the Nifty 50 heat map. The breadth on the Nifty 50 is improved too, I was saying. But Asian Paints, big move. Insurance companies, are term insurance premiums moving up maybe. And pharma names. Tamanna, that's on the Nifty %.
Yeah, so the Asian Paints story is really getting echoed across that space. If you look at a Berger, Indigo was the sort of breakout story of this afternoon. And let's just quickly pull up those scripts before we go to what's happening in the broader markets. So that entire space, because there are now channel checks showing that price hikes are being taken between 0.7 to 1%, and Indigo is the one which is really showing the action there. So Kansai, Narulak as well. But again, this is a market which has those specific stories, because if you look at where the broader markets are closing and headed to close, actually recovery there in the Nifty Mid Cap 150 as well. Recovery in the small cap index as well from its lowest points. And we'll quickly, as we wrap up, pull up the top gainers and losers on the BSE 500 just to give you a view of what the market looked like. Shoppers stop, I think, just completely on a spree, last minute jump, big volumes, 15% up. No stopping RVNL, 13.5, 14% up. Rajesh Exports, another interesting one over there. Indigo Paints we just talked about. So all of those stories today. Textiles actually is quite in showing prominence, with Vardhaman Textiles also up there. M&M having a bad day. Blue Star maybe some profit booking, and even your auto anchs, your Uno Minda there as well. Fertilizer is another space which has been aching all over, even if you look at a fact, etc. So I would say, you're being optimistic. I know, Niraj, that you're off the lows of the day, but this is a bit of a sobering kind of an end to what has been a pretty good run. By no means I'm calling it a correction, but let's see if it deepens tomorrow or not.
Yeah, would be interesting to see that for sure. Well, and people have been circumspect. Like I said, we've been calling it for 3 days. And just today when we spoke about it being difficult to call tops, the market has given the first sign. Let's see if that deepens. But for now, from Tamanna and me and the team that put this show together, thanks so much for tuning in. Up next, though, is Talking Point.
The market closes lower to log the worst session since the 4th of June after hitting record highs. Most sectors end lower. Nifty Auto falls 2%. There's relief for Adani Ports as the Supreme Court stays the Gujarat High Court's order to recover 108 hectares of land allotted for the company's port in Mundra. The Uttar Pradesh government calls a meeting of all Indian EV makers on the 11th of July to discuss financial incentives beyond FAME 2. Maruti Suzuki, Toyota India, Hyundai, Tata Motors, M&M will be participating. Two strong listings on the bourses today as Bansal Wire lists at premium of 35%, while MKO Pharma debuts at 31% above its IPO price. SEBI set to evaluate expert committee recommendations to reduce volatility and protect the individual investor in the futures and options space on the 15th of July. Prime Minister Modi is in Austria for a two-day visit, reiterates not the time for war in a joint statement with Austria. The BMW hit-and-run case accused Mihir Shah is produced in court, says he was in the driver's seat at the time of the accident but was not drunk. Good evening and welcome. You are watching Profit 360 on NDTV Profit and I'm Nupur Talwar Suri. Over the next half hour, we bring you all the news from the markets as well as other national and international news. But before we move on to the show, it's time to see how the markets have performed today. In fact, Niraj Shah is joining us for a quick wrap on all the action there. Niraj, take us through what's happened.
The markets closed in the red today. Benchmarks of all sorts dipped. The breadth recovered towards the close, but still adverse. And it was a similar story that played out on the Nifty and the broader markets. Though I must say, if you look at the Nifty 50 heat map, it will show you that there were very almost even Stevens on the gainers versus the losers. Just that the quantum of losers and the losses that they had were very high. So M&M was down about 7%. There was weakness in metals and the heavyweight IT sector with TCS, HCL Tech, etc. correcting in trade was a bit of a weakling. Reliance and Infosys and ICICI Bank, the other heavies down about 0.5% along with HDFC Bank. So heavyweights dragged the indices lower. But there were enough stocks which are doing well. Paint companies led by Asian Paints, price hike rumors or other flashes that came in led the way. Insurance companies, probably term insurance premiums moving up maybe. Those stocks did well. Pharmaceuticals as a bucket has done very well with Divi's and Sun Pharma, both of them doing well for themselves in the session today. So that was a story on the Nifty. The broader end of the spectrum, again, across the board, enough set of losers and gainers. Mid caps about 1/3%, small caps maybe slightly more, but the BSE 500 list of winners and losers will come up on your screen next, and you will see all kinds. So I was speaking about paints. Look at Indigo Paints. This one was up about 9.5%. And by the way, the others like Berger, etc. too were in the green. Shoppers Stop up 15%. Rail Vikas Nigam about 13%. Trending day for RVNL, by the way, ended the day at the day's high. There was some strength in stocks like Tube Investments and some other holding companies as well. Textiles did well. India Cements after a while was up about 5%. So that was a good show. The weak show came in from stocks like Mahindra and Mahindra, the key standout mover of the trade today by virtue of the price cuts in the SUV. Blue Star down about 5.5% after the uptick yesterday. Stocks like Uno Minda and some of the other auto ancillaries also corrected in trade. So this was a long and short of how trade shaped up today. The first day of a real scare, not a scare really, but a corrective move. Let's see if this extends itself.
All right. Thank you very much for that. Now, we also spoke to Mihir Vora, CIO of Trust Mutual Fund earlier today and asked him about the outlook on auto sector and the reason that it might be in a downturn.
Given the fact that auto had done so well as a sector in the last few months, maybe, it's taking a breather. We also must understand that this year is a little bit skewed in terms of the wedding season. So, for example, there were hardly any weddings in the last few months. And even in July, there are only a few days of weddings. And then again, after August, there are very few dates. So it's I think one of the years with the lowest number of days which are auspicious for weddings. So we might be seeing a little bit of seasonality impact because of that too.
Now, in what is coming as a big relief for Adani Ports, the Supreme Court has stayed the Gujarat High Court's order to recover 108 hectares of land allotted to the Gujarat Mundra port. Now, let's go across to Varun for more on this. Varun, give us some more details of what happened in court.
So yeah, that's right. The Supreme Court has stayed a Gujarat High Court order that paved the way for implementation of the recovery of land allotted to Adani Ports in Navinal village in Mundra in Gujarat. Now, earlier this year, the state government had agreed to retrieve 108 hectares of cattle grazing land in the Kutch region after it was flagged that the villagers in the Navinal village were left with very little land for grazing their cattle. Now, this land was allotted to the country's top private port operator in 2005 by the then BJP government for the Mundra Port Special Economic Zone project. This case dates back 2011 when a PIL was filed by the residents of Navinal village challenging the allocation of grazing land or gaucher to Adani Ports. It was contended back then that the allocation had left very little grazing land for the villagers. Now, this case was initially disposed of by the Gujarat High Court in 2014 on the state government's assurance that it would grant 387 hectares of grazing land to the villagers. However, on observing a discrepancy in the state's offer, the case was recalled and restored. Now, earlier this year, the High Court found that there were around 732 animals for which an area of about 132 hectares of grazing land would be required. However, the allotment of land to Adani Ports in 2005 had left the villagers with only 17 hectares of grazing land. This led to the state government to file an affidavit before the Gujarat High Court stating that it would retrieve 108 hectares of lands from the Adani Ports. Now, the High Court gave its approval to the state's suggestion on July 5, but this order has now been stayed by the top court of the land.
All right. Thank you very much, Varun, for joining us and bringing us those details. Now, the Uttar Pradesh government has called a meeting of all the EV makers in India tomorrow. Now, this comes after a waiver of road tax on hybrid cars. Mahindra & Mahindra has also cleared the air on its price cuts. Tushar is joining us now. Tushar, give us a broad sense of what's happening on this.
So, Nupur, the Uttar Pradesh government, as you rightly pointed out, has called a meeting of all its Indian EV makers, as in the stakeholders of electric mobility in India, tomorrow. Now, that includes the likes of Maruti Suzuki, Hyundai, Tata Motors, Mahindra & Mahindra, as well as Toyota, some of them who have electric cars in their portfolio and some of them who do not have, and other EV makers maybe in the two-wheeler space or in the three-wheeler space. Now, this is significant, so to speak, because it comes a few days after the Uttar Pradesh government waived off the road tax on electric vehicles, on hybrid vehicles, strong hybrid vehicles in the state, which comes to the benefit of Maruti Suzuki and Toyota. Remember, both these companies have about 4 strong hybrid cars in the market. Speaking of the waiving of the hybrid tax on the hybrid cars, Mahindra & Mahindra has actually clarified that the XUV 700 price cut that was announced last night hasn't got to do anything with the waiving of the road tax or with to do with the unsold inventory that the company has at this point of time. The company says that the price cut was aimed at rationalizing the prices to drive growth. Essentially, there was a 4 lakh gap between the AX5 variant and the AX7 variant. Now that has reduced to about 2 lakh rupees. So that is aimed at pushing up the volumes. There will be no impact of the price cut. There will be increased manufacturing capacity for the XUV 700 to keep up with the demand. But channel checks show that there is some bit of inventory that is lying over of the AX7 variant, that is the top end variant. Nupur.
All right, Tushar, do stay with us. Now, let's also talk about the price war that we are witnessing in the auto space, specifically in this mid-size segment, under which, of course, the XUV also falls. So, tell us a bit more about the cars that are essentially in demand in this particular space.
So, it's rightly pointed out. So the point is the 15 to 20 lakh rupees bracket is the mid-size SUV category, and that's where all the action is taking place. Remember last night or just yesterday, Tata Motors as well as Mahindra reduced prices of their mid-size SUVs. In the case of Tata, that's the Harrier as well as Safari, and the Mahindra, that's the XUV 700 AX7 variant. If you look at, and of course, Maruti and Toyota's hybrid SUVs, that's the Grand Vitara as well as the Hyryder, also stand to benefit from that price revision that will come in because of the tax waiver seen in Uttar Pradesh. Not across the country, but at least in that state, which is actually the third largest auto sales market in the country. So in that sense, the hybrids are inching a bit ahead in terms of the price competition that is there, and the Mahindras are lagging a bit, which is the priciest, so to speak, in that space. Creta is the benchmark, so to speak, in the mid-size SUV space. Tata has the best-selling SUVs in the market, both in Nexon and the Punch. So essentially a very packed market, a very exciting market, a lot of action that is happening in this space. How it spills over because of the inventory issues that we are seeing. People are saying that the inventory levels that are high in the luxury SUV segment may also spill over into the compact SUV segment going ahead into in the second half of the year.
All right. Thank you very much, Tushar, for joining us and bringing us all those details. Now, Emcure Pharmaceuticals listed on the Lal Street today at a 31% premium. Burgess Desai, the chairman of Emcure Pharma, expressed his excitement for the new journey.
So it has been a long journey, and from a very modest beginnings, today we are a pharma major. For the last decade or so, this company has been run in terms of systems, processes, etc. as a listed company. So the transition is going to be seamless and smooth. But of course, we are absolutely flabbergasted by the response where the issue was oversubscribed nearly 68 times. So we are looking forward to this exciting new phase in our journey.
And the MD and CEO of the company, Satish Mehta, spoke about how the company is bullish on the Indian markets and finds a lot of growth opportunities.
I would like to say, that trust us, we are long-term players and we have a long-term perspective. And we, as a company, we are very bullish about the Indian market. We see a lot of growth opportunities in India. We also feel, that emerging markets, they mimic India. So to that extent, the strategy will be to focus on India big time and also on emerging markets. And we will also keep on launching, complex molecules in Europe and Canada, both the markets, we like.
And Bansal Wire made a strong market debut at 39% premium over its IPO price. The company plans to utilize the IPO proceeds for the repayment or the prepayment of certain outstanding borrowings. Bansal Wire Industries is a stainless steel wire manufacturing company that operates in three main segments. That's high carbon, low carbon, and stainless steel wire. Moving on, a SEBI panel will meet tomorrow to consider recommendations of the expert panel on futures and options trade. There's been a frenzy in the derivative space, with turnover more than doubling in just 6 years and an increase of over 20 lakh individual investors putting in money in just 1 year. SEBI has also found that 9 out of 10 investors tend to lose money in the derivative space. The expert panel was formed to give recommendations to SEBI on how to protect retail investors. Sajid Mangat, in fact, has more details and joins us.
As per the recommendations made by the expert panel, the panel has suggested that while it is not reducing the number of products or weekly option products which are currently in market, it wants most of them to be expired on a single day for a single exchange. So NSE will have one single day when all its weekly products will expire, and BSE will have a similar day when all its products will expire. Further, it is also looking at increasing the size of the contracts. The contracts are currently at 5 lakhs. lakhs. The panel is suggesting that the size of the contracts should be increased between 10 to 20 lakhs in line with how the markets have grown over the last 5 to 6 years. That will mean that the contract sizes will now be from will almost double or more than that, and the lot sizes which comprises of the contract will also increase. There are a couple of things that will happen as a result of that. One, the size of the amount of money that required to buy one contract will increase for retail investors who are now investing on single contracts which are as low as 5 lakhs. And secondly, the amount of margins that are required by retail investors to put in will also increase. The committee expects that the increase in value of contract and increase in margin will bring down the kind of volumes and turnover in the F&O market, and thereby cool down the market with respect to the participation of retail investors in the F&O market.
Now, in fact, as the union budget is just less than 2 weeks away, corporates have spoken to NDTV Profit, and they say that the government's spend on infrastructure must continue.
First thing is, I think the government has done well in terms of fiscal discipline. So first important thing that I would expect is the infrastructure push. And at the end of the day, our competitiveness is dependent on that infrastructure development within the country. For example, logistics costs are huge, and we need to bring that down. And I think we will be very happy if that infrastructure development scheme continues.
From our perspective, there is continuity in policy. That's great. We are. I think government has done a lot, and when I say government, I mean both the central and the state governments. And there are several state governments which are actually actively encouraging more labor-oriented industry and supporting, further capital creation there. I think, we have what is called ROSCTL. If there is continuity of that, I think that's what we are looking at, and a long-term visibility of that. So those kind of signals are more than sufficient for the sector to continue to perform well.
What is public debt and why is it important for a developing economy like ours? We are simplifying some budget jargon for you today. Take a look.
As the term suggests, public debt is the amount of money the government owes to its public. In developing economies like India, collecting taxes and dividends is not enough to run the country. The government often relies on loans to meet its development needs. So, it creates bonds, bills, and securities and offers them to the public. The public buy these almost risk-free instruments at low interest rates, and the government raises money. This creates public debt. The government can borrow both within the country and internationally, meaning from global banks. When a government decides to borrow, someone has to make sure the government doesn't go overboard and end up with more borrowing than it can repay. This process is called public debt management, and the Reserve Bank of India is the sole debt manager of the government. To ensure that the debt is manageable, we look at the debt to GDP ratio. Global investors often look at this ratio to evaluate if the government will be able to repay its debt. In financial year 2021, public debt had reached a staggering 88% of the GDP, owing to the COVID-19 pandemic and its devastating impact on the economy. The goal since then has been to bring it under control. No matter how hard a government tries, public debt cannot be avoided. It is essential in a country like India, where economic development, social welfare, and breaking the poverty cycle is the need of the hour. Bureau Report, NDTV Profit.
Well, it's time for a very short break, but stay with us as we bring you the latest update on the Worli hit-and-run case on the other side. Welcome back. Now, Patanjali is in trouble yet again. The Bombay High Court has directed Patanjali Ayurved to deposit 50 lakh rupees for violating a 2023 interim order. The court had restrained the company from selling its camphor products. Charu Singh is joining us now. Charu, what is the case and what has the court said so far? It's, of course, asked Patanjali to deposit 50 lakh rupees.
Yeah, as per the most recent order, the Bombay High Court has directed Patanjali Ayurved Limited to deposit rupees 50 lakh as a fine for continuing with the sale of camphor-related products even after the court had temporarily asked it to stop dealing with such products because there was a trademark dispute that Patanjali was embroiled in with another company selling similar kind of camphor-based products, which is Mangalam Organics Limited. Now, even though the order to restrain itself from being associated in such sales way back in August last year, Patanjali continued to sell these products and even listed it on its website for as recently as July 8 this year. That is why with these documents indicating such sales, Mangalam Organics went up to the Bombay High Court and showed the bench that it has, that Patanjali has continued to violate its order. And not only that, even after the direction, Patanjali has continued with sales of almost 49.7 lakhs. That is why the court has imposed a fine